What's up, everybody? Good morning. Welcome to the stream. We get started in just a little bit. Feel free to smash the like button while you're waiting and hang on tight. Looks like we're getting a rational start to the morning. It's going to be a light, if any, trading day today, so we're going to take it very easy. If I do anything, I'm trading outside the bands. You know how that goes. It's always going to be a rough time. Small position size. Get ready for everything to load. We got 10 minutes until market starts. Just going to chill on doing all my calcs here really quick. Get my front and center. Good morning, everybody. Alpha, Alexa, DK, Lori. Looks like we're opening irrational, so I'm taking it kind of easy. Feel free to smash the like button while you're waiting. Got about 9 minutes. I'm going to be on the live trading podcast this morning with Wolf Financial and the gang as well. So I'll be back and forth when it comes to talking, but the screen will be live here. Oh, what's up, Torch? Thanks, man. Appreciate it. So we're getting a rational start to the day today. Market opening right outside the DD bands, which is going to be a very light, very cautious day for me today. I have them already marked on my chart. Getting ready for the market to open so Rocket Scooter can point out liquidity map for the SPY. Nasdaq has sold off a little bit harder than the S&P has. We also have a massive earnings week this week, so pay attention to all the stocks on that list. I'll start talking about those once we get the stream going. FOMC also Wednesday, so remember, we're going to do a little bit of mean reverting trading going up into that. And that announcement, I'm going to make a prediction, is likely to be 25 basis points. Is a lot of information I used to kind of go into that call, but I think the FOMC is going to taper off and stop raising rates altogether. And we'll have a nice flat streak of about 0 going into summer. And then once the labor market stabilizes, FOMC is going to kick on the afterburners and probably raise rates a lot more aggressively, anywhere upwards of a point to 2 points at a time. It's going to be a shock to most people, but they've done this before. It's a really good way to get really good rate hikes in. But you have to make sure Wall Street's comfortable with that because they do not want to crash the markets to do that. So we'll start flattening out, I think, as early as this meeting. I think Wall Street perceived that as slightly bullish, I would say, in general. I don't expect the market to still rally really hard. We have good positional data, though, so the month is going to be not so bearish, but again, with earnings being all over the place, it could still be choppy. So how do you place this DVD bands? I do them all myself. I made a bot that's in our Discord now, so by the way, everybody, if you're here, make sure you go to the Discord really quick while we have a little bit of time before we get started. If you click this link right here, you get access to our Discord. You get access to all the stuff, and we have a bot that's not going to give it. Yeah, I'm drawing them on my chart live until we get our futures data in the platform this month. I'll just manually do it. Then it'll be automated, which would be pretty cool. Anything about selling puts? Well, in this particular mode, remember we got last week where we were below, a monthly hedge pressure was below price, right? So we have bull structure. Selling outside of if you open up in bull zones and selling down in bear zones is not a terrible idea. Somebody asked me about the technique of selling puts, if I think that the market's not going to crash, but it might not likely go up or go up fast, I'd love to sell puts on high premium days, like days where a lot of volatility is baked in. So that's a great idea, I think, as the strategy goes. Yeah, it's going to be a very busy week. Hey, what's up, Darius? Yep. Agree 100%. And plus, opening right outside the bands is going to be not too exciting of a day anyway. It's going to kind of keep things small. I'm on the Good Morning Fitbit podcast. So they're about to call my name in a second. So if they do, I'll have to meet the mic. Hey guys, 1 minute till open. Remember, rational start. Small positions. If I do anything at all, usually rational is a sit out signal for us. I'm trading micros on small account to 100K, a challenge 10K to 100K. I've been doing this fully transparent. This is day 3. We made like 20, I think trade about 24 contracts round trip total, 100% win rate so far. I haven't lost a trade yet, but you know, today might be the day if I do anything. Rational is always a little cray cray. Take it easy. Good morning. What's up, Charles? What's up? What's up? I get our calculations coming through. Let's see, where's SPY today? All right. I think since SPY has moved the least of the two, Nasdaq is going to be interacting with the CD bands first. I'm just going to wait till I get all my liquidity map calculations come through before I start doing anything. So just waiting on that. Let me get my wall circuit killer here. There we go. All right, SPY opening on liquidity map. We have what's called mean reverting, short up. So this already out the door, This right here is a random balanced market. Anything inside of here, once we tap this middle, the day's already over. Wow. So now this is signaled 2 rules together. We had an irrational signal, which already has me scared of the market. We have another signal, which is hitting liquidity pocket right out the door. Everybody in chat, if you've been here for a while, you know what this means. Type in chat. What is this? What do we have? See if you can guess it really quick. First person to guess it right, I'll give you a prize. I will send you a $1 million prize of one. I'll send you 1 penny every year for the next 1 million years. I promise. Maybe it's not binding, but already, right? Already the market has found balance 6 seconds in, I feel like. So this is actually 2 set out signals in a row. So we're actually going to not really do much today. Probably not anything at all. The only thing I'm going to wait for, to be perfectly honest, you know, from wall to middle, the market's already over in the S&P. That's cool. So what we'll do is we'll find some plays and see if we can't find anything exciting around the globe. But look, we have S&P resilience is negative. Nasdaq resilience is negative. So there could be resistance against that hedge pressure coming out the door. But yeah, market has found liquidity pockets back and forth and already irrational outside of the DD band. So I'm not excited to do anything at all today. That's good to see. So the neat thing about our signals here is that I know it sounds like the least sexy thing in the world, but you know what you do? If you know what's going to happen or you know what's not going to happen, you can know comfortably to sit out in the market is going to be random, not even worth investing in. So I kind of like getting signals like that, and I kind of don't. Why I do like is I can actually take the day off and go do anything else, which is kind of cool. I'm going to say Nasdaq's about here. I'm just going to guess. But we are already 2 signals in of sit out, so it's kind of neat. Can we peek in the Apple? Yeah, so we're going to look at some things going into pre-market, pre-earnings. We'll take a look at some of the stocks around the market. Should get how the scanner works. By the way, go to that Discord if you've not yet. We have a DD band. Now I have a bot that I made last night. I quickly coded it, so you let me know if there's any errors. The bot is going to spit out these DD numbers for you guys until we get our futures data on the platform, which is going to be T-minus 1 month or less. We should have a lot of that work going off next week or the week after. But until then, I have a bot that I made to hold you guys over. 298, 80 something. Okay. It's about right there. I'll have to double check those numbers, but it looks about good. Okay, so what we're going to do is we have mean reverting plays right here. So let's go ahead and look for nothing liquidity map. Let's instead look for bull breakouts and bear breakouts today. With resilience being... Hold on 1 second. It's really quick. Yeah, rational and downside. That's great. Sit out day is a sit out day. Wait, hold on. Oh, wait. All right, all right. I was scaring myself for a minute. I was looking at the resilience numbers and I was like, wait, we only have 7% of the data. I was like, oh, okay, good. We're good. I was wondering what. This is what one of those, you know, I hate Mondays sort of thing. Okay, so basically, guys, here's how this works. Anytime you're between a bear and a bull zone, you go right to the middle of that zone. It's called liquidity pocket. Anytime a market hits a liquidity pocket, it has actually found balance. Right out the door, the S&P is balanced. So what we do in balanced markets is absolutely nothing. You can't bet that a balanced market breaks one way or the other. You can only react once it does. I don't take a bet that it breaks one way or the other, but we'll make some inferences here with what we have, right? So being in the middle, the market is random from here. That's it. 100% random. You will not be able to predict up or down. If you do any trades today from here on out, you are 100% chance gambling on something that you can't predict. Everyone's in harmony here. The market maker gapped the market. We opened lower than we closed yesterday. We've moved this far and found balance. The market is pre-prepping for FOMC and earnings. So in a liquidity pocket, when SPY QQQ hits it first, the market's random from here. Whether it goes down or goes up has to do with who closes their positions first. So what's neat about that is you want to take a guess. Your guess is as good as mine. Your moving averages and indicators will never predict who exits a position first. And that's the best thing about Rocket Scooter. I have a signal that tells me to sit out. Liquidity pocket closes the window of opportunity right out the door. Now, I could take a bear zone break or a bull zone break and take that chase, but I have two rules about shorting. The major one is I don't like to take short positions when the market is structured above monthly hedge pressure. That means that the market has bullish hedging over the course of the month, which goes all the way to 17th of February. So here in this mode, I don't want to necessarily short because the market is structured bullish. So what's going to happen is we're going to chop around and maybe rally, maybe sell, and I don't know. So the idea is that there's really nothing I could take because nothing looks good. On the surface, DD being positive, really positive, right? Anything above 0.5 tells me that the market wants to sustain and support inside of a bull zone, but we're not in a bull zone, right? So chances are we may approach the bull zone and test it. And if we do break, there is a scalp from here to there I might want to take as long as the market moves. But we also hit an irrational signal today as well. I don't do anything or very light positioning once we go outside this band. Even if we come back in, it's very light. So I have no trades inside of here, nothing inside of here where my mouse is. I might take a hedge pressure break scalp forward, but if resilience is negative, then it tells me this is already resistance. So let's draw it on the chart, right? Everything today is pointing at impractical to do much, right? So 1 second. Let's start looking at some plays. All right, was chit-chatting on the Good Morning FinTwit podcast. Got in there. It's pretty good. If you guys are on Twitter, by the way, make sure you follow us there. We do a lot of podcasts and speaking engagements. We're in a bunch of different things. I'm speaking on like 4 different panels these days, so feel free to come out. Rocket Scooter, we have a space we do on Twitter Tuesday morning, so make sure when you follow us there, we'll be front and center live with actually our own stuff, Rocket Scooter. Monday we have a Good Morning FinTwit. I got invited to speak on a panel with the Kalshi folks, so giving them a little bit of a shout out. It's a cool platform. Actually, they've been around for a while, but I actually just heard of them, and it's actually a neat platform where you can actually trade off of events, which is pretty neat. If you guys ever checked it out, it's like on their website, it's like you can instead of like Tesla stock signals, you can actually like put on the app is like. I'm looking for battery prices to go up or down, or demand of cars to go up or down, and it's like looking at events related to the stock. Pretty neat concept. I thought it was really nice to look at that. And then of course once the street kicks off again next probably a couple weeks or so, you know, me and some of the folks are live on that weekly show with the street. So we do a lot of podcasts and spaces and whatever. So we'll let you guys know. Keep y'all entertained. Can you repeat what I said about the HP scalp? Oh, nothing. There's no play today. All this is a classic sit out day. So we've mean reverting in the middle, right? Once you hit liquidity pocket, it's done. If there's anything, if there's a break of hedge pressure and resilience is greater than 0 and we're rational, I could take it to fill the gap, and that's about it. So in all honesty, I don't really see something that's too nice with NASDAQ resilience less than 0. The NASDAQ is likely not going to have any momentum to keep the market from from going up too high. So today is a sit out day with no long or short. Nasdaq's looking a little worse, I'd say, than the S&P. What's that website? I'll make a tweet about it. Let me find it real quick. Let me send it real quick. Like I said, I just started looking at it. It looked pretty dope. Everybody, make sure you smash the like button real quick, and let's find some plays. This was it. So that's the link towards you. I'm gonna check it out. If you do check it out, let me know what you think about it. I think it's a pretty cool concept. It's unique and original. I always love when there's tech providers out there that actually make something worth a damn. So I always love checking it out. Anything that has a new approach or a new method, or a new style. There's so many providers out there just rehashing the same open art junk, right? How many different color schemes can you add to technical analysis, right? That shit was invented in the 60s. I don't know. They still using bright colors and tie-dye. Blech. That's the sound of me vomiting in my mouth. Give this man a like for crying out. Give me a like for crying out loud. Thank you, Charles. I love you. Okay, so let's look at some plays, right? The market's nice and steady, but with bearish and bullish signals mixed. Not a lot I can say that I want to do. So what I'm going to do is I'm going to remove all the stuff from my scanner, right? And I'm going to go up and I'm going to add just one thing. I'm going to look for HP break up and down. I'm going to look for any kind of hedge pressure breaks in general, right? So let's do the downs first and see if we find anything on hedge pressure breakdown. Hey, Sandy, good morning. Hey, did you get everything working? I saw on the other day you wrote in tech support about something. It's a platform. You good? You good, girl? We can help you out if you need any help. Let me know. Okay, so distance to monthly hedge pressure. What I'm looking for is any monthly hedge pressure breaks to the downside. Anything on a percent basis that's right on the edge. And I'm going to look for some high volume stuff as well. Actually, I think I can add... oh, custom strategies coming out this week. We're going to add a volume limitation, volume-based. Limits to my scan. Okay, so I'm gonna look for anything that's got high volume that is breaking hedge pressure down. So there's a lot of low volume, low stuff. Palantir's coming out right on the thing. Oh, you're good, Sandy? Awesome. I'm glad to hear it. By the way, if you guys haven't checked out the Rock Scooter platform really quick, I invite you to. And what's kind of great, I'm gonna tell you something. You may not think this at the start, but I'm gonna make a very cool announcement. If you do not believe this is 100% true. It actually is somewhat against the law for me to lie about this. But right out the door of the last challenge I did, I went on a 70-day, 70, documented, broker statement was posted, everything, 70-day streak without losing a day for 70 trading days. Imagine, that's not 70 calendar days, folks, it's 70 trading days, which adds up to about 3.5 months, right? That's what, 14 weeks? 14 weeks without a red day right out the door of the last challenge. Now, how did I accomplish that, right? A lot of days when I wake up with mixed signals, I know it's mixed and I choose to take light risk or sit out. I don't wake up and gamble every day. Imagine that amount of control. When you're trading, that's what you aspire to do, is to learn to not lose instead of learn to try to win. When you don't lose money trading, the gains will come. There's a famous trader who said that. I'm quoting someone, I don't know who said it, but I know someone said it. And I remember always keeping that in my back pocket. If you don't lose at trading, the gains will come. The point of that saying is your goal is to try to not lose instead of try not to win. As long as you're not losing, then you have money in your account. If you don't have money in your account, you can't play the game. So try not to lose is the goal of trading. Of course, you're going to lose, right? But the goal is you're trading not to lose. If you're going to bet and put bets on the table, your bets are designed to try to not lose. So we did the MHP breakdowns. Nothing looks too crazy there. Let's find some stocks on the HP breakdowns. Just anything that looks like it's selling off today. So distance to hedge pressure right on the edge. We'll be very careful of anything that's broken down and pushing down. Looks like we have Walgreens, American Airlines, GE today. Amazon, Apple. You witnessed it. Ali was here. Yeah. So this is what I want you to do. I want everybody to subscribe to the stream really quick and click that like button. While we get going here, if I don't make a trade, now again, the goal of a small account challenge is to not be risky. The goal is to teach people that you can take a small account, and if you can grow it, there's a way to grow it. It's not wake up one day and put it all in red and double the account and you got money to pay your bills next month. That's not the goal at all. The goal is you have expendable cash in an account that you're okay with losing all. And you can still survive and pay your bills. Now, the next step is try not to lose it all. Try not to lose any of it. Only bet when you know and sit out when you don't. The best part of Rocket Secure is the first platform in the world that have tools available that I use to instruct myself to sit out. When the tools tell me that the market is irrational and the tools tell me the market is random, I know that I don't have a good window of opportunity to trade, so I don't go in there and try to make a risk on something I can guarantee is going to be random. Does everybody get that? Scooter Squad, we all cool? I know it's not sexy to come in here, not YOLO every day, but your gurus out there won't show you a broker statement connecting A to B for anything longer than a month because of that very fact. They're going to make 25 calls in their Discord, and they're going to take the one that won and parade it around like it cured cancer. That's not the way trading is. Trading is Babe Ruthing it, showing the account number, and everything on the screen, and letting people see point from A to B. So the last trading challenge we did, we started at $6,700. I think the last day of the stream, the last day of the live stream of the challenge, literally the last live stream I did of the challenge. The very next day, we pivoted and started building the Rocket Scooter platform. So that pulled us off the YouTube, went back to Zoom, and continued our trading there. But I was close to about 90,000, give or take, at the end of the day, from the 6,700 start. And I think the challenge is about 9 months long. Never lapsed a day. Should point A to B. That history there. You're buying KSS. Also, anybody want to do some charts, let me know. But everything today is just kind of choppy and matte. Any upside we have on the SPY, I think that's going to likely limit us. NASDAQ resilience is trying to push positive, which is good. Now, the one thing I tell myself is there could be a scalp on SPY on that hedge pressure break upside to here. The first bounce I get, remember, half gap inside of the redistribution zone is pretty good. DD is positive, so there's a couple of rules there. As long as we stay inside the band, which we didn't, anytime you're inside the band, a positive DD ratio tells me it wants to connect with the upper band. But since we open outside the band, one of the Rocket Scooter rules, it says we eliminate that. There's another new rule that's emerging here, and what it says is if you open in a bull zone, if DD is greater than 1/2, you also likely stay in that bull zone. But remember, we passed through this random territory here, so I'm not exactly seeing anything here that's making me want to take this market. Number two, with Nasdaq resilience less than 0, Nasdaq's likely to resist its half gap, even though the S&P is trying to push its own gap forward. So what does that tell me? Well, we have some major earnings coming up this week. So Nasdaq is trading a little lower than the S&P. It's telling me about weaker tech, healthcare, and telecom than we do the rest of the sectors. So it's going to be weird. It's going to be choppy. There could be an upside scalp from here to here. That is what I called out today. Is resilience is positive? Check. DD positive? Check. We're somewhat rational, but even if I took a small position from here to here, it just doesn't give me much to hope for. With Nasdaq being lower than its 0 line, I'm not too excited about that. So, and even so, Nasdaq is going to hit itself. Nasdaq does have an illiquidity pocket here from a short scalp to there. So I think S&P likely won't even fill its gap either. Any gamble I do take will be the upside, and I think Nasdaq limiting its move to here. So when I look at any kind of index plays, I like to watch the Nasdaq and the S&P together. There could be a play here, but there is no indication that it wants to break. So it's a little bit of a gamble if I do anything, and Nasdaq is right at the edge of its DD bands as well. So let me put that. I need to double check these. I think Kyle was helping me. Not Kyle, Nick. Nick was sending me some messages about the bot. I didn't get a chance. I did the bot really late, so I didn't get a chance to check it to see if it was right. But I think that the lower DD band is like right here actually. So 293, 67. Oh, it's right there. Yeah. And then we have, this one is 298, 88. I think Nick, I think you are right, because I did my conversions overnight, which you were supposed to do at 9:30 in the morning. So there it is. So even on the edge of the irrational band here, just not looking too pretty. We have ExxonMobil, I think. So we're talking about the oil prices. So let's go ahead and do USO really quick on the scanner. I mean, on the liquidity map, let's take a look. On the ExxonMobil, I think it's Tuesday or Wednesday. We have a bear short up. So how that works, everybody, if you didn't know, liquidity map is super cool. What we do is we show you where market maker positions are. The first platform in the world to hand this to you. We get market maker positions from options. Our algorithm looks for certain kinds of trades that qualify. Market makers will buy when markets are illiquid in the equities market. And when they take a counter position to a one-sided buyer or seller, they'll go out and hedge it with options or futures, depending. And so when they get that other side of the trade, that's saying a market maker has an option. Like for instance, I buy, they'll short to me and buy a call. They'll be hedging that call algorithmically, delta hedging, which is a process that all market makers do to balance their risk of those options that are sold to the other market makers. So there's 2 layers of market making. That entire process is I buy shares, market maker will buy or sell to me, they'll buy options. Another market maker will sell options to them. That big triangle, as that third market maker is buying or selling the stock to balance the sold options, they said it circles right back around to me. It's A, B, C, back to me. And so that entire process we make was called a liquidity map, which shows the pressure of that entire triangle trading against each other. And so we have bear positioning, bull positioning, and hedge pressures and monthly hedge pressures. The main key factor is liquidity map. Get 3 code letters from the algorithm. I match it up to my flashcard. This is literally a flashcard. You can print this out. Make sure you get a color printer if you like. It's all colorful here. Actually, we should change these colors. I'm going to change these colors today from red and green, because I'm sure some people may have red, green colorblind. We should use different colors, and I'll get that fixed today. But anyways, red and green, call walls, put walls, hedge pressure, monthly hedge pressure, and then it's going to mirror what you see on your Rocket Scooter platform. When you load this up, by the way, there's a free trial. Did you not know? The link I'm going to post really quick, free trial. No credit card, free trial. You can check it out immediately, and just kind of see what's going on. Throw in your favorite stock here. It's going to tell me what to look at. I'm going to match it with the flashcard. Bear short up is telling me that we're in the bear territory. We're on the short side of hedge pressure, which is the blue line. And hedge pressure is above monthly hedge pressure. The combination of these two have oil trading in between, or USO trading in between these levels. This is representing oil prices, right? So it's kind of a scalpy range between yellow and blue. If I want to find buyers, I'm going to look for them at yellow to trade from yellow to blue. If I want to find sellers and I want to short, I'd short against blue to yellow. So that's it. The letters point me to where liquidity is. This is where buyers or sellers will be, and this is where they meet their counterparts. So liquidity map's like a treasure map. This is where I'm standing now, and I'm walking with my shovel to find the X in the ground. That's where it is. Liquidity map A to B. So if I was going to do any kind of trades, I'm looking for some balancing act between here and here. Now, I don't normally short. I don't like to take any short legs unless they're below monthly hedge pressure, and that's it. Okay, so just quickly going back to SPY for run some of your stocks. If you guys want to type in some of your favorite tickers in here, I'll run them in here and show you how to do a trade plan using liquidity map and see how I did not chase that long, and the market's falling back to that random spot. This is how good I am at what I do for a living. I said it's random. I didn't chase. I didn't touch. And I know a lot of new traders probably took their moving averages and their MACDs and jumped in on the long right here, now holding upside down. Isn't it better to wake up literally in the morning and say, I'm not doing anything. The market's choppy and going nowhere. There's a reason like 50 people did some clapping emojis on the space this morning, because a lot of these folks on here, Sim and AJ, Leah, Blake, they're all super pro at what they do as well. They have their own techniques and they all see the same thing. If you wake up today with green candles and tell yourself you're ready to long that market because it was moving fast yesterday, then you got to learn how to see what's in front of your face. Everything here does not point to a good upside. To see that the market is going nowhere and coming back to where it started makes me feel proud. I chose to take a loss of 0. Markets move nowhere. That is how I like to trade, right? So US oil, nice and steady here. I was looking at this, thou shall not YOLO, pretty much. So I don't really see much that I like. Since DD is positive, I'm going to try to look for some kind of stocks that are breaking upside just to see if we get anything. Let's see if we have any kind of hedge pressure break upsides. SPY is like right on the edge here, and that resilience is positive, so it's looking kind of good, but still I don't have any indication to do much. Nasdaq needs to get a little bit of steam. Let me double check the news really quick. I need to make sure that I've got all my stuff front and center. That's about it on financial juice. Nothing too crazy today. Let's read. Oh, let's look at the Commander Traders today. Major earnings this morning, just double checking. Any major high market caps. These are all before market. So earnings going to be light today. I think tomorrow things start kicking off a little heavier. Yeah, Exxon, Pfizer, McDonald's, UPS, Caterpillar, AMD. That's going to be a big day. So speaking of AMD, let's check the SOXA really quick. Semiconductor index on the long side. This is an ETF that I like to look at all the time, especially pre-market earnings, just to kind of give some insight into what's going on, especially with the Nasdaq trading super low. I was expecting the SOXA to be not in a super bullish position as well. So it is trying to push a little higher. Then the SOXA, this closes yesterday's close, so even this gap down, and it's kind of struggling to fill its gap. Nasdaq still kind of fighting lower, the S&P pushing higher. When you have to compare the two, we usually like to say the S&P beats the Nasdaq. So in this particular mode, like limited upside from here to here, if one were to be a riskier person than I am, here to here. Peloton breaking up. Let's take a look at Peloton on the liquidity map. So what you can see right now is Peloton is a BLU right out the door. What you look for these, and let's actually run a Peloton. I like this, right? A little post here. 1297, I'm going to click monthly mode. I'm looking for any resistances on Peloton. Right, so in monthly mode, there's nothing but bull sides actually looking pretty good. I really found Peloton to be a momentum stock post-COVID, but anything that has movement, I always try to look at and see if I can't find a play. So this is how I'm going to map this out. So any upside, I'm going to look for any gaps that haven't been filled yet. And I haven't looked at Peloton in a while, so you can clearly see my chart is not pre-marked. But here's what you want to do. Clearly, there's a gap that hasn't been filled in Peloton right there where my mouse is, right here. I like to call Peloton a career killer. Anytime you make a post about Peloton going long, in the last year or two, it's always cycled around. So I might not say much. I might not post this to Twitter. I get weird stares from my friends anytime I ever mention Peloton. But I do take momentum whenever there is. Doesn't mean I don't believe in the company. I just don't believe in the company. Yeah, I'll say it out loud. I don't believe in the company in general, but I do believe in momentum. So Peloton does have upside potential to fill its gap. So if it is any type of upside momentum from here to there, that's actually not a terrible play to gap fill, right? Thanks for putting that out, Ethan. So gap fill is my upper target. If I were to get a trade to there, right? My stop is there, of course. So bull long ups are very strong to the upside. They get nice little hedging burps. Why don't I why don't I take a picture of it? Let's go ahead and say this. Let's make a call on this. I kind of like it, a little bit. Oh, so last night, I don't know what happened. The door on the second floor. So I have a 4-story house, right? So I'm up on the wait, 1, 2, 3. Yeah. So my room's on the 3rd story, and I know I heard gushing wind last night, all night. So I went down to the 2nd story, and the door to the patio, babe, was open, wide open. It was so cold downstairs, and I don't know what happened. Apparently the wind must have pushed that door open. Yeah. It was raining last night. It was windy last night. So that's a balcony. So it's like not anybody could get in unless they Spider-Man to the 2nd floor. But I walked out. I was like, man, it's really cold outside. My cats are sitting there on the balcony. I was like, oh, hello. Everything in Texas was bigger. Don't let the four stories fool you. It's definitely like, it looks like this, right? Like I used to have a house that was like one of those kind of, what do they call them? What's the name of it? I used to have a house that was like, 4,500 something like that square feet, and it was like this, and it was 2-story. Right? It was like a box like that. Well, not really a box, but it was pretty big, like sprawled out big. And Texas has a lot of land, so like, there was like 4 rooms and a game room and a movie theater and all that good stuff. That's typical in Texas, right? And I'm not gonna lie, Texas is a place where you can get a house that looks big, that doesn't cost a lot at all. I'm gonna tell you, we call them McMansions here, especially if you live out in the boonies or live out in the burbs. Like, there's a ton of people in Texas that like literally, like your average college grad American can have themselves like a $500,000 house that's like 5,000 square feet. It is so great, and I think people starting to figure that out, so everybody's moving to our state from everywhere else. But I live in the city, so like in Houston, right, there's like concentric circles like that. This is downtown. Okay, let me draw something that doesn't look like a nipple. Downtown is here, then there's like a loop, and then there's like a beltway, and then there's like another kind of loop thing. It's concentric circles, right? So in the city, nobody really lives downtown. Downtown is like work and play. It's a little different than most cities, but most people live inside the loop. This is considered like in the city, like here, all through here. So I live literally like right here. I could throw a rock and probably hit a skyscraper. That's how close I am to downtown. All the skyscrapers are here. So this little area of Houston is like where, I don't know, the cool kids live, I guess. Lucky me, I'm on the edge of cool kid territory. But because you're in the city, you don't get like the sprawling, mansion level, 20,000 square foot plots that you get in the suburbs. Literally, if you move to the suburbs surrounding, like outside of that 2nd circle, you can pay like $50 a square foot for a mansion-sized house. It is ridiculous how cheap it is to live here. Now, property taxes are ridiculously high. We don't have a state income tax in Texas. However, the government always gets their money somehow, right? So they more than make up for it. Your city does, at least, with the ridiculous property taxes, which typically, you live in Pearland, Sherman? Dude, I used to live, my last house, I used to live in Pearland. No way. I used to live in Pearland. So that's super awesome. My family, we all grew up there. I went to Pearland High School. Sean Kramer grew up in Wait, did y'all go to my high school? What year did y'all graduate? Conroe. Yeah, I know Charles lives up in Conroe. A lot of people here live in Texas. Y'all know what I'm saying, right? But you guys have massive houses too. So it's kind of funny, like people in Texas, like everyone has a big house in Texas. Don't be impressed by it. We all got one. It's like you move to Texas and they're like, here's your McMansion, and it comes in a gift basket. Trust me. So we moved to the city. I have a 4-story house, but it's like this. It's like built straight up like this. So I have like my staircase like wraps, well, actually it's not like that. It's more like this, like that. And there's like I don't know, like a Yeah, and I've got like a rooftop balcony and everything. But like I have a little staircase that goes like this. Goes around, all the rooms are built and stuff. But it's neat because I can like see the city from here. And actually, my first date with Nicole was on my balcony, FaceTiming on the 4th of July. She's rolling her eyes right now. We watched the fireworks on FaceTime. Isn't that adorable? I know I'm romantic sometimes. Hudson County, 2 blocks south of Numbers. Bro, you live in Montrose? Sean. Well, you got to send me a message Discord, man. We got to get a beer sometime. Oh, you used to? Oh, nice. Numbers, man. Numbers was my jam in high school. I saw Nine Inch Nails play at Numbers one time. Oh, all these Texas folks here. A lot of Texas traders. Okay, so Peloton, it's kind of looking all right. I do like this. Let me see what I got. All right. Yeah, so in this mode, guys, there's a style of trading you can do. Now, in futures, my rule is I sit out. So when I do sit out, instead of taking any risk plays, there are ways that people do trade these mean reverting kind of areas. Inside of a bull and bear zone that's like this, we call liquidity pocket. The minute you hit liquidity pockets, markets are random, so it's really hard to predict. There's no momentum, and anything that happens is just going to be random leading up into whatever event's coming next. There's some big FOMC stuff coming up. We have big earnings coming up, and I don't think the market's going to really have an easy time finding momentum. Any upside with QQQ or the rest of the market will end today right there. I will guarantee that my belief is solid that any push we get would end to there. So if I get lucky, pretend I was in a long and I got lucky to get that hedge pressure break, I would close everything out because NASDAQ has a clear as day resistance right there. But again, being on the edge of this irrational territory, I don't want to take any bets. Now, the way that you can trade, we do teach in kind of our options education section. So what we do when markets are balanced between bull and bear zones like this, one of the cool tricks is to play the premium game. So leading into earnings, right, you get a little bit of IV built into a lot of these stocks. Anything that you can put in, and I'll show you how to do a monthly map as well to tell that. But one of the things people do is they'll sell calls outside of this area, like they'll sell calls in the bull zone, and they'll sell puts in the bear zone, right? And have some kind of either credit or debit type spread, whether you're selling calls up here or here and maybe buying puts. I call that a vertical credit spread. I'm sorry, not buying puts, buying calls. Let me fully wake up today. Like that, right? And you can do a different orientation of these. You can do it just like this, selling calls, selling puts to say that the market, you're betting that it won't break out either direction and collecting that premium. And then of course, if it does break out, you have a credit spread. So you actually bought some very cheap out of the money puts and calls. It'll gain some very good percent as you start to run out towards that, right? So one of the things to do in these kind of setups is that when the market moves up like this, the puts you can buy are cheap, the calls you can sell are expensive. So people can leg into these type of trades. You know, you ever heard iron condors, butterflies, they're all kinds of straddle type trades, or I say straddle, but like trades that are betting on a certain range in a particular setup of options. I like to think of it one leg at a time instead of identifying them with the name of the options trade itself. So again, the way that I do it is I like to think of where I don't want it to go first. And so what we don't normally bet is that you spontaneously break out bullish or spontaneously break out bearish. That even though we have a liquidity pocket here, we have a greater liquidity zone here, right? This is kind of a bigger area. So it's like a pocket and a pocket between bear zone and bull zone. So the greater bull zone is like, it would be very bullish there. And the greater bear zone would be down here. So if I don't think it's going to go there or there, I will sell the options that say it won't do that. Yeah, so snake trader. I trade a little bit of everything. I trade stocks, options, futures, you name it. On this particular challenge, I'm doing a 10K to 100K futures challenge. I've done something similar before, just kind of running a small account up. This is day 3 of the challenge. Up 5% so far. You know, we start out slow and I balance the account. So I leverage to a degree that I'm only ratioing a certain percent of the account every day that I make a trade. And so what Rocket Scooter does is we are a platform, the first platform in the world that shows you market maker positions. And so what I do with this information, if I know market maker positions and market maker options, I can show where market makers are delta hedging, which is what some of these lines you'll see on the chart are. The combinations of these things allow me to make a very simple analysis as to where I think buyers and sellers will be. And I trade where I think the buyers and sellers will be. I don't use technical analysis anymore. I just use the letters on the chart. Algorithm gives me some letters. I match it up with what I see in my little flashcard. And I look for buyers and sellers and trade there. You can get access to this by checking out our platform. Everybody, if it is your first time here, we'd love for you guys to check it out. There's no credit card required. Literally no downside. Data feeds everything. You can load this up. Our platform's sort of going viral right now. It's pretty crazy to be under the limelight. We're speaking on a lot of different podcasts and events and shows and stuff. So it's good to see people are getting some traction. It's a new type of analysis. So no candle charts, no multi-time frame. We don't do any of that stuff anymore. We don't use any technical indicators. We're marking where certain things are on the chart that are important to my style. It's all automated for you. So give it a check. All you guys live in Texas, man. Ollie in New Jersey. Yeah, so there's a lot of you folks up in Jersey too. Yeah, check it out. We also have a Discord. If you haven't been here, I want everybody to go down and check out the Discord. This is free for now. We're about to open up a brand new program in about a week. You'll notice some very big changes, but we invite you to come check it out. There's also a coupon. If you guys want to know, we have what's called Rocket Scooter Pro. It allows you to have our full platform, our scanner,
All the functions that come with this. We have brand new types of analysis. It's not going to be a traditional trading platform with just scanner, watch lists, and news. We're going to have all kind of statistical edges that we're building into it for traders to help themselves actually plan their trades before they make them. It's unlike anything else that's out there to a very significant degree, and we just got started. We launched this fully back in September. I guess late August, early September, to where we are now. And then as the months go by, we're building new stuff. We have stock data, we're gonna have options data, futures data is coming. This year, you'll be able to trade stocks, trade futures, trade options in this platform. And each data feed will have a little bit of a fee to it. But right now, we have this special thing going on for all of our early birds, all you guys and girls here. If you sign up for the monthly, you can actually lock in all of your data feeds, the pro version, everything that comes out for $99 a month, which is going to cover all your data costs, everything, and the algorithm that comes with the platform, everything. So instead of paying like $20 for this data feed, $20 for that data feed, and limiting yourself, you can get everything we ever release ever locked in for that initial rate. So we're very proud. It'll be about a $300 total package if you have everything a la carte, like we get futures, Forex, crypto data, all that. You'll have to pay for each one of them, but $99 a month gives you that kind of early bird thing. And that is what people like, the idea. If you ever go to like TradingView or something and buy your data feeds one at a time, you're gonna pay a little bit of money for it, all right? So we're gonna promise you guys $100 a month for all your data feeds. And as we release them, we gotta lock it in now. So check it out, monthly package. I woke up today saying I'm gonna sit out and do absolutely nothing. I could call that from the start of the day with my tools. We're rule-based trading. We have 5 rules when to sit out, 4 rules when to take profit, 3 rules when not to trade, time-wise and random and balance-wise. And 2 of those rules triggered right out the door, and I said I'm sitting out from the start of the day. And guess what? I was right. Why I said I'm taking no trades today out the door, and I'm taking no trades today out the door. I never changed my mind on that, unless I get a break of something. So I said from here, market's random. You can rewind the stream. This is day 3, 3rd day in a row where I called exactly what happened. Day 1, I didn't trade. Day 2, I didn't trade. Sorry, day 3, I didn't trade. Day 2, I made a bunch of trades, right? So what I'm doing is I'm protecting my account and not gambling. And you're going to see what control looks like as I grow this account to 100K. And I'll do it live, so come every day. And you guys learn something. What we do is we'll stream for about an hour every morning. After the live stream on YouTube, I'm going to go over an educational course to show what I did or didn't do, and why I made the decision I did. So I know a lot of people might have got trapped in that NASDAQ long. I went on the space this morning, and some people were talking about taking it, and I said, I don't know. I was hearing Simply Sim said she took a trade and got out, which is great. She's a really, I love Sim. She's smart. If you guys like her, she's awesome. Most people are, I think AJ's taking QQQ puts, which is good. So everybody's looking at downside market, not believing this upside. We knew it wasn't really going to move up higher. That NASDAQ resilience is just really gross, right? It shows this is going to be resistance today. So, right. Piton. Yeah, let's take a look at that Piton. So on that scanner, yeah, just right on that edge there, right? So nothing really here, and that's like limit to the upside. So yeah. So it's anything that's going to look like it's on that side of, now we're in this kind of mode of markets pulling back a little bit. I'm still not looking for any shorts. NASDAQ is still outside of the DD bands, by the way, if you didn't know what the DD bands are. This is one of our rules that talk about futures being oversold or overbought. If futures move too far too fast, the entire stock market's going to behave very weird. And so when NASDAQ opens outside of these green bands that I have on my chart here, it's going to move very erratically. We call this irrational. One of our 5 rules of sit out is if you open outside these bands, you do sit out. You don't make a bet either way. So that's really easy to see that. And if you guys like rule-based trading, that's what we're here to give you that's different. Technical indicators don't have any rules with them other than interpreting them very openly. Like, okay, RSI is oversold at 20. Okay, so should I buy? Right? It's not really a rule because it doesn't have any conditions to go with it. It doesn't say, well, RSI only use it when volatility is this way or when price is this way or something. It just says use it all the time. So the difference here is we have this thing, and it's going to be coming out very soon. I invite you all to at least check out the free trial, is that all the indications that we do, which is where market maker positioning is right here, This is where the distribution of bull and bear positions are, which is here. And this is where arbitrage is predicting if the S&P is going to fill its gap or not, here. These three major indicators are all I really use to trade with. Other things I use to kind of limit myself and limit my position size or kind of gauge risk, like these bands, is a risk gauge. A market is too risky to make a big bet here. I'm not going to make it. Market is balanced anytime you hit a bear and bull zone. Rule number 2, it's random from here. And look at that randomness. It's very hard to gauge. It's random and bet small. The combination of those two rules, I sit out. And I didn't get caught in the long. I'm not getting caught in the short. And the best thing to do as a trader is to be able to forecast that the market's going to do crazy stuff and not just be momentum or trending. If you don't have this information, it might have looked like that nice flat overnight move was consolidating, was going to rally, and you might have bought the dip, right? So the difference is with rules to sit out and rules to lower risk is something that nobody's ever had before. You can't get that with technical analysis. It never turns itself off. In the future, we're having a mode called rule assist mode. We're able to program your own rules. Like, don't make any trades once you hit liquidity pocket. You'll be able to program the rules, and we'll teach you the rules I use. You'll be able to discover rules on your own. And then you'll have it actually turn off indicators when your rules are triggered, so that it doesn't try to show you something that can entice you. Imagine if you had rules that literally removed those moving averages, or those, I don't know, what are those, what's that thing that people draw that looks like this? It looks like a bunch of like squares and trapezoids. I don't know. What's that? There's one called waves, harmonics. Yeah. Oh, probably yeah. Like, people invent all kinds of garbage ways to look at a market, right? But what if you had something that would actually turn it off, right? That said, don't use this right now. What are the ones that are waves, right? It's like Elliott waves, not to make fun of people that use that stuff, but they're always trying to find signals, and they don't have any gauge to say the market is going to have no repetitiveness today. It's going to move behaviorally random. And so rule assist mode will allow you to program a bunch of rules that will actually turn off anything on your chart that violates the rules. So my rule will say, don't use these three things if the market opens outside of these bands. And if, as long as that's happening, it's going to turn them off or gray them out of my chart so that I'm not tricked into using them. So to have indicators that are smart enough to turn themselves off is the thing that we're going to build, and that's coming out very fast. So we're glad you guys are taking a look at the platform, and invite all y'all to the free trial while we're here. Oh yeah, Elliott waves. Yep. That's it. The market has no mathematical continuity. If you traded during the Donald Trump era, you would know that. Donald Trump would tweet something, say goodbye to whatever he thought was going to happen that day. The market would go one way, go the other way. That volatility would come just from the words of one human being. Imagine trying to predict the market when every time you're in a trade, you're just crossing your fingers that he wouldn't tweet anything. That's how I traded for 4 whole years. President now, very, very benign, very mild, right? His Twitter doesn't really do much to the market, which is great. Easier environment. So the idea is that that kind of mentality, or that kind of action, really proves that you can't really predict the stock market with basic math. You just can't. Yeah, there was a joke. There's an old meme with like Thanos, right, with his glove, and they superimposed Donald Trump's face over Thanos, and it says, "With a single snap of my fingers, I'll destroy half of the portfolios in the world." That was kind of cute, but it's very true, right? You would always have to make sure that you had that Twitter account was always up on a separate screen, of all things. But that's just to show that anybody, any firm, any one party can change the direction of the market. You can't forecast what humans are going to do, especially humans with the ability to have a lot of influence, right? So yeah. Right now, market's selling off. Again, I didn't take the long. I knew that was a bad long to take, and now we're pressing the bear zone. What we're going to do now is try to find any support on QQQ and see if we can find any baseline support there on the downside on monthlies. Down to 260. So what I'm going to do is I'm going to draw a monthly map. This is something that's very important. And I think that we have some major tech coming out. Hold on. Did he call my name? Hold on. Hold on. Always make sure they're not calling my name. Okay, so monthly maps are very important. This is one of the features that is coming out in this next patch. What monthly maps will do is they're going to map out what the entire month looks like, and I'm going to manually draw it on here just to kind of take a look at it. We want to see what we're going to go to single date. So there's a function on the side. This is going to show me where all market maker positions are and risk is at any point in time. This is a very cool trick and it'll help you gauge volatility over the course of the month. I'll draw one of them here, but we'll teach a little bit about this today if you guys want to learn something. If you all do me a favor, sign up for this free trial. Remember, get the platform, and in about 20 minutes, I'm going to have a live Zoom call. I'm going to teach how this works. You won't regret coming. I promise y'all that, to this meeting. We do little info sessions and training sessions every single day for the members, but you're all welcome to come and check it out. Go there, and there's some videos on this, but what I'm going to do is I'm going to look at the volatility for the week. So we're going to actually look at single date. I'm going to map out SPY for... today is the 30th. So let's map out Wednesday really quick and see what Wednesday looks like. Trade that 408 level. We have 401 support. So let's do, Wednesday is going to be the 1st of February. So what I'm going to do is I'm going to draw like a little bit of a box right here. And I'm going to color this maybe like gray. And this is going to show me where the bull and bear zones are, at least for SPY going into the future. Let me clone this. I'm going to make myself a lighter gray box for the bear side. So showing about 400 is that resistance right here. $401. Okay. Okay, so what I'm gonna do is I'm gonna inch out for the next couple of dates just to see what they look like on different dates. Okay, let me pick out a different date here. So the 10th, 17th. So I'm getting a little bit of internet lag this morning. Okay, let me do the 3rd really quick. My internet's frozen. Let me refresh my platform. Okay. Okay, that's better. So I'm going to do is I'm going to map out just, this is Wednesday, but I'm looking at all the Fridays coming up. So I'm going to put SPY in here. I'm going to go to single date. I'm going to pick my date and I'm going to go to Friday. Make a note of this. Okay. So if I go to monthly mode, okay, let me pick auto, monthly mode, daily mode, monthly mode, single mode. Okay. Maybe it is just the same. Okay, so let's go to January or February 3rd. Okay. 379 and 360. So what I'm going to do is I'm going to clone these. I'm going to put this right at February 3rd. So let me go here. And this is going to be able to look at risk. I'm actually going to plot out what SPY is going to do over the month. This is a very cool trick if you're just tuning in. $379 to $360. What I'm looking for is the distance between call and put zones. This is going to show me where the expected volatility and expected ranges over the week. So 79 and 60 is a pretty big range, right? So what I'm going to do here is I'm going to put this all the way down at 379. Is that right? That's very, very, very low on bull side. Let me double check. And stay. Okay, let me try something really quick. Yeah. Let me just try something really quick. Yeah, I'm getting delays. Because when I hit enter... Yeah. Actually, give me a second to look into this, because it's... Okay. So in the meantime, give me 1 second. I want you guys to all at least go over to the Rocket Scooter website, sign up really quick, and we'll do this. We'll do this today. We'll give you guys a session. You can come learn. I'll do this monthly maps trick there. I don't want to spend too much time on the stream educating. This is just for my live trades. Right out the door, let's just talk about this real quick. So right here on SPY, liquidity pockets are always random. Anytime you're between a bull and bear zone, you hit the middle. Market loves to hold the middle, and so I don't like to take bets around it. And automatically out the door. And my futures account, I decided to sit out. Futures account, I like to trade directional moves to find imbalances and balances. And nothing today just looked that good for me to want to take. Nasdaq has opened irrational, so it's kind of like just sit out from the start. And then now we're going to try to do any kind of analysis, but not really any stocks showed up on the scanner to really even, you know, give me some enticement to want to trade anything. Finding any bull setups today. If I try to run, hold on. Let's see real quick. Going to sort by distance from hedge pressure to find anything that looks good. Airbnb, DocuSign. These are all in those kind of scalp modes here, falling to the edges of hedge pressure. Now, if you're a believer in some companies, what I like to look for is if you fall to these hedge pressures, I would usually long off of them as long as markets are rational. But because QQQ is outside of what we call those DD bands, I'm not trying really hard to bet that anything holds. Irrational kind of goes across the board for the entire index. With the entire QQQ pushing down, you're going to get some unusual hedging across the board. So I'm going to take everything with a grain of salt. Anything that's falling to these boundaries that are looking pretty good, just not easy, right? So I don't take that short when I see it like that, but I necessarily don't take the long either. It's great to just choose to let the market do crazy stuff today and, you know, walk away until you see something that looks better. Looking at Amazon today, okay. All right. Do me a favor, you guys. Who learned something today? Y'all learn anything good? The third day in a row, I drew something on the screen at the start of the day, and it did exactly what I drew. And I chose to sit out one more time. Right? Yeah. Okay, so Amazon right here, it's a BLD 100 to 99. So it looks like we can get some major tech support as Amazon falls down and moves to there. Now, let's just be real on the S&P and QQQ. Let's see if there's any kind of resistance targets, red lines. Let me look really quick to see if we have any. We're on red line support already. These are resistance targets. I'm gonna look for any downside move on NASDAQ. So what I'm gonna do is mark these up, and I'll do this technique in today's Zoom call. I'll show you where the downside target is today for NASDAQ if we do continue to fall. I have 11,961 on the Qs. So we continue to push lower. Monthly hedge pressure break on Amazon. This is a nice squeeze play from 100 to 99 right down to here. BLDs in between the two hedge pressures look just like this. Here to there. There likely could be buyers to support the market there, but any losing of hedge pressure in a down condition is very, very, very nasty. Very nasty, right? So there's no support. If you lose 99, Amazon likely is hugging down that 94 level. You're the best. Alexa, love you. You're so good to me. Thank you for the sweet comments. Love y'all. Yeah, they're going to breach 12,000 on QQQ today. Like I said, markets are pulling back and selling off. One may say, why aren't you shorting? Well, shorting comes with additional volatility, and I'll also talk about that in today's session. Long markets have less drawdown because volatility is shrinking, the distance between your peak and trough. Sell-off markets have higher volatility as they fall. Your drawdowns can get bigger based on how bad your position entry is. So the idea when trading a small account is to make sure you regulate your drawdowns to, not take you to zero. In any account, big or small, you want to have that same, that same ability. You want to regulate your drawdowns. Anytime markets are falling, your drawdowns get higher because shorting is always a really silly idea. Now, I'll short in bear structure against monthly hedge pressure to short to something, and I'll take a short scalp. I'll get in and get out on the same day, and I'll never hold a short more than one day. Or I'll never hold a short win more than one day. If I'm in a short trade like a swing, and that one day that it pays off handsomely, I always close at the end of that day because volatility will crush your premiums. So I don't short on breaks to the downside. I love just to sit out and watch all of you guys panic. Well, not Rocket Scooter, folks. Rocket Scooter knows what that means. That's a classic sit-out signal, and we just sit back and watch the rest of Twitter panic and the rest of YouTube panic as people are scratching their heads of what's going on. So I don't chase a short on any breaks. I happily let it fall knowing that I knew it was going to fall. Yeah, the Ali who posted that bearish chart in the morning, that's the one and only. Ali's my chemical engineering counterpart. He's one of our captains in chat, so he's a very, 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 very smart guy. Or pilots, we call them pilots. Actually, Ali is also a lieutenant general of the Rocket Scooter spaceship. So, if you guys have any questions for me, I want y'all to come into this. Do me a favor right now. Everybody go here. Free access to this. I'm going to do a Zoom call. I want you all to come in. I'm going to show you guys 3 things today. Sit out rules that I have that told me to not take the long today. And how I knew not to take that long. It's very easy on the surface. Everybody here will see it. We'll go over it one more time, and we'll talk about what I think is going to happen on the greater month. We're going to talk about the commitment of traders for positional risk. And of course, I'm going to show you guys the red line techniques and find some downside target about 11,960 on Qs. It's about how far we're going to fall, and I don't think I even want to take that short to get there anyways, for a couple of reasons. Resilience told me the bigger picture today, not to believe much. And this is great. So I love seeing these things manifest. You're awesome. Okay, day 3 of the challenge. Again, no losing days yet. Up 5% in the account, 3 days. It's 10K to 100K. It's going to be a grind, right? So, but we position the account correctly so that I don't take drawdowns that will blow up the account. There's a way to do that in futures. Usually the easiest things to get into if you trade on. There's a lot of risk trading in general, especially futures. You can lose more than you started with and go negative. There's ways that can happen. So believe it or not, trading is risky, but I teach you some math that will balance your position size so that you can kind of remove that massive swinging risk that you can get by limiting how much you're willing to bet. And so there's some tricks that I have that allow me to regulate my position size, and these calculations are things we all teach in our program. We have a 4-week program. If you sign up for it, your first week of it's free. You'll learn so much in your first week. I'm guarantee you'll buy the other 3 and hang out for a month. If you don't like what you see, you always cancel any time. And of course, take a whole bunch of this technique with you when you go on to your greater endeavors. We're going to teach you positional risk, how to manage your position size, how to do risk and reward before you trade, how to make a plan from A to B. Anytime you put money on the table, you should always know when you're getting in, when you're getting out, when you're adding, when you're subtracting. I have a rule on how to do everything. Rules are the way to go. I have a degree in chemical engineering. All I learned were rules on how things work. Physics were our rules. You couldn't violate physics. Don't violate these rules here. Appreciate you guys tuning in. Click that Discord right now. You got about 20 seconds to do it, because right now we're going to tell you how this works. This is the revolution of trading analysis. No more technicals, delayed indicators. Past indication and indicates the future. There's disclaimers from the regulatory bodies themselves that say past performance don't indicate future results. Even they say don't use technical analysis. Nothing you did in the past can predict the future. That's true. So why use past elements to use an equation to do a technical indicator to predict the future? Sounds silly. It's not completely silly. Anybody with a basic education in math or programming will tell you that that's just dumb. We have a smart way to trade. Rules that you can do every time. Consistent rules means consistent coaching for yourself. If you know what you're doing wrong, at least you have a consistent behavior to correct. That's the thing we'll teach you. I want you guys to all go to that Discord really quick, check it out, we love you, and get the free trial rocket scooter. I'll tell you how to get in it. Go to that Discord right now, and next hour we'll go through a private training session for everybody that's in there. So go click. We love y'all, and we're gonna call it a day. See you later.